When I was in uni, I was a terrible student. I've actually been a terrible student my entire life, since the age of 12. And I've built my life on 5 or 6 Fs, which is not what I want to talk about. I actually want to talk about how to make money in crypto, like how to know when to sell. But the context of this is important. Faith, family, friends, fitness, finance, fame, and fun. I'll say it again. Faith, family, friends, fitness, finance, fame, and fun. Fame just means your reputation in your community. To live a healthy and successful life, you have to check off all of these boxes. I was an F student, and those are the Fs that I've kind of built my life upon. Back to me being in university. I was a terrible student, but I was pretty good at connecting with my professors, and I had a very genius, amazing professor of economics. And I went and talked to him one time and I said, how do you make a good guess, a good prediction about the future? And I'll always remember this because this has to do with cryptocurrency. He said you take your pessimistic, your optimistic, and your realistic. What you do is you multiply your realistic times 3. So 3 of the realistics, your pessimistic, and your optimistic. Then you take the average of those, and that is the best, in his opinion, his advice to me, the best prediction of the realistic results. So in cryptocurrency, how do we predict what the future price or exit price of what our tokens or coins are going to be? It all ties together. What's your pessimistic view? What's your optimistic view? And what is 3 times your realistic view of what a price will turn out to be? Now it's so fun because this same professor, before we even had that conversation, I was watching a YouTube video like 12 years ago about Fibonacci sequences that occur in nature. When you pick up a pine needle and you notice the spiral trend of the little flakes that appear on a pine needle, that's a Fibonacci pattern that occurs in nature. And we can do Fibonacci patterns in the market. We can do Fib-based trend extensions, which are basically kind of like the scientific, mathematical, schematic scheme of figuring out natural occurrences where levels of rejection or acceptance occur. But let's just keep this simple, stupid, right? Let's kiss it. Keep it simple, stupid. When we can apply both Fib-based trend extensions, but also our own practical sense of optimistic, realistic, and pessimistic, we can find pretty good levels that we should exit our crypto at. If you're trying to time the top, you're going to get screwed because you'll think it's the top or it'll be at the top and you'll think it's going to go further. But if you'll simply just make a predefined exit strategy based on the optimistic returns that you could have, the pessimistic returns that you could have, 3 times the realistic returns you could have, and average them, then when you're positioned in your altcoins, when you hit that major price point, which is the average of all of those, you know to exit. And honestly, that's how you walk away a winner. Most people try and time the tops, or they get greedy and they think that their 5x is going to double again and they end up losing everything. But if you simply say, I've put this money into crypto, it's done this specific return, which I think is the realistic amount, you've reached a new level of wealth, just pull it out. You made great returns within a short period of time. There's no reason to be specifically greedy. And you followed a schematic that works for you. So let's look at the charts and let's view what are the optimistic, realistic, and pessimistic. This is the others chart right here. And optimistically, from one end of the range to the other, it's 1,000%. Let's jump over to, that's the optimistic. Let's jump over to the realistic, which is the total 3. This is everything except for Bitcoin and Ethereum. The realistic return is 412%. Then if we include everything, Bitcoin and Ethereum and all of the altcoins, this range right here, let me move it, there we go, is 300%. So we have a 300% pessimistic, we have a 400% realistic, and we have a 900% optimistic. Now let's do some basic math. So very simply put here, assuming that all of your altcoins that you're in are still in that bear market territory. We're not talking about Doge and Sui and Solana. We're talking about things that haven't run yet. Optimistically, we have a 10x, which is 1,000%. Realistically, we have a 415%, and pessimistically a 300%. So 1,000 plus 3 times our realistic plus the pessimistic. That gives us a total of 2,445. Divide that by 5. Remember, 3 times realistic plus pessimistic plus optimistic. So we take the 2,545 divided by 5. That gives us on average the realistic target that we should exit at is 509%. So basically a 5x. Anytime that one of my cryptos hits a 5x, I'm going to be pulling out a mega bag of it. Maybe, yes, I'll leave a little moon bag in case things go to the moon and I don't want to miss out on the upside. But generally speaking, any position that I have, which is still in its bear market territories, in the others chart, not in your top 10 crypto, that's still waiting to pump, I'm going to exit at around a 5x price point. Now you got to remember, this is a rule of thumb. This encompasses your low cap coins. Also, it weighs in your big heavy coins that are already pretty mature. So don't be greedy. If you have a 5x and you're happy and you've made some money, pull the money out. That being said, how do we determine when it's time to pull out a smaller, lower cap coin that could do well beyond just the 5x? In that case, what you do is you remove the total market cap or you remove the total 3 market cap and you simply give a greater weight to the bigger percentage gains. I'm just shooting off the cuff here, but if you take the optimistic, which is a 10x or 1,000%, and you take the realistic, which is basically a 4x times 3, so 1,200%, you add those two together, you get 2,245. You divide those simply by 4, we're still looking at a 560%. So if you're not in Bitcoin and Ethereum, you're simply in the total 3 and below, a 5.6x, that is the realistic exit point to go for, in my opinion. Or let's just spice it up a little bit and say that you're in the red light district of cryptocurrency, as Alex Becker likes to call it. So you're $300 million market caps and below, and you think that a 12x is optimistic. So you have the 1,200. Let's say realistic is a 6x and pessimistic is a 5x. The sum of those is 3,500 divided by 5 in that case. Your average is going to be an 8.5. So if your portfolio is largely in the riskier coins, the smaller altcoin gems that might do much more parabolic gains, you can look at this as a rule of thumb and say, hey, anytime that I get an 8x, I'm out. 8 to 9x, I'm completely out. So you can tweak these. The general principle being, though, is that you should take a weighted average with your realistic expectation, giving 3 times the weight of your optimistic and pessimistic. These charts are easy to make. Anybody can do this. But the point being is that when you're looking at your portfolio and you're saying, how and when do I exit over the next 8 months, 6 months, whatever it may be, when you categorize your coins and you give them the weighted percentage of how well you think they'll do, it gives you a better idea of a rule of thumb of when just to completely exit and be content. We always want to maximize. All of us human beings, all of us investors, we want to get the best bang for our buck. But the truth is, there's kind of a shortcut window to multiply what you have in crypto, and you shouldn't be greedy. You should just simply be content. If you have $100,000 invested in crypto and you're able to turn that into $500,000 within 12 months, forget being able to multiply that again to $1 million. Just simply acknowledge what you got and get out. Take those gains and rotate it into something boring, something passive, real estate, rentals, whatever. The point being, though, is that the bears and the bulls get fed, the pigs get slaughtered. So don't be overly greedy. And if you choose not to listen to me, tuck this away in the back of your mind for future anyways, because this same principle applies to so many things. Realistic times 3, plus your optimistic, plus your pessimistic, divide it by 5. Take the average of all of those. Just give a bigger weighted percentage to the realistic explanation outcome that you think is going to happen. All right. Simply be content if you reach a new level of wealth in your life. Then steward it wisely. Most lottery winners go broke within a few years after it. And guess what? That's probably most people in crypto that make good money. They go and buy stupid shit. Shouldn't swear like that. But that's going to wrap up today's video. I have a Patreon in the link below. Check out the Tangimal in the link below. Like and subscribe. Till next time.